Good morning, ladies and gentlemen, and welcome to the EGDON Resources PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so, and these will be available via your Investor Meet company dashboard. Before we begin, if I may submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to Managing Director Mark Abbott. Good morning, sir.
Good morning, and good morning, everybody. Thank you for your time this morning. I'm accompanied here by Martin Durham, Technical Director at EGDON, and James Elston, Commercial and Business Director. This morning, we're going to go through the interim results for the 6 months ended on the 31st of January of this year and provide you with a general business update. In terms of EGDON, I'm sure you're familiar with our focus in the onshore UK, largely, and a couple of licenses offshore. 34 licenses in total. We've seen a recent step change in production and revenues, and I think hopefully, as I'll show you, we've got multiple growth catalysts in the coming period to further develop the business. We're supporting the UK's energy security in a small way, and we're also looking to develop geothermal, energy storage, hydrogen, renewable energy opportunities as part of the energy transition. Our vision is to produce locally derived, secure and affordable, sustainable energy to help support the UK's evolving energy needs. We're looking to maintain our UK focus from a strategic perspective, to focus on our conventional oil and gas assets, with a near-term growth focus on production and revenues. Looking to develop, as I say, those transition energy projects, and also, importantly, I think, maintain our significant portfolio of shale gas assets. We've obviously seen an interesting 6 months in terms of shale gas, and I'll go through that a little bit more detail as part of the presentation. So looking at the 6 months ended 31st of January, we saw a 27% increase in our production to just over 250 barrels of oil equivalent per day, up on the 200 barrels during the same period last year. Total production was just under 46,500 barrels. And clearly Wressle was a standout asset, averaging just under 700 barrels of oil per day. And it's significantly exceeding the forecast production rates we envisaged prior to bringing it on stream back in 2021. To date, we've seen, to the 31st of January, we saw 357,000 plus barrels of water-free oil produced at Wressle since it came on production in January 2021. And that's now exceeded 400,000 barrels, as we'll show you as we go and talk a little bit more detail about Wressle. We've got planning appeals that were made for Biscathorpe, and the decision's still awaited on that. Quite frustratingly, it's outside of our control. At North Kelsey, we've got a hearing on the 14th of June to determine whether they will grant us a further 12 months to drill that well. And as I mentioned when we're talking about shale gas, we saw the moratorium on hydraulic fracturing for shale gas lifted in September of last year as part of the trust regime, one of their cornerstone policies. Unfortunately, with Rishi Sunak coming in, that was reinstated in October. So a bit of a flip-flop there in terms of shale. License P2304, which contained the Endeavour gas discovery, was relinquished during the period. And we announced the acquisition of Aurora Production UK Limited to increase our equity in the Waddock Cross and Avington oil fields. From a financial perspective, it's been another period of very strong results. Our revenues were up by over 46% to 3.73 million. Prior to tax, amortization and impairments, we generated 2.11 million. A post-tax profit for the period of 0.44 million, with a tax charge of 0.74, over half of that related to the energy profit levy. What we have seen is a strengthening of our cash position, with cash and cash equivalents of 5.5 million, net current assets of 6.6 million, and no borrowings. So over the period, we've continued to see a strengthening of our financial position, which puts us in a good place to follow up on the work program that we're planning for the remainder of this year and next. In the period since 31st of January. We've seen a weakening in commodity prices, but production and revenues have continued to be strong, with February and March unaudited revenues of 0.63 million and 0.52 million respectively. On the 6th of February, we entered into a farm out option agreement in relation to a license in North Yorkshire. We have 6 months to elect to farm in and drill a well on the Weaverthorpe prospect, which our initial review indicates has mean prospective gas resources of 58 billion cubic feet of gas. So a near-term gas opportunity. 1st of March, we completed the acquisition of Aurora Production UK Limited, and that's subsequently been renamed as EGDON Resources Aurora Limited. And on the 19th of April, as flagged with the impairment in our accounts in July of last year, we relinquished P1929, which contained the Resolution gas discovery. Disappointing, but with Shell's withdrawal and the NSTA's position, not much we could really do about that. So let's get into the assets themselves and start off with Wressle. It's still exceeding our expectations. We've got a 30% interest in the 2 licenses which contain Wressle, and we've seen outstanding production and financial performance. In late March, we exceeded 400,000 barrels. We've still seen no formation water in our production to date. And we've progressed a 2-stage gas monetisation. The first stage focusing on the ash over grit, which all the regulatory consents are already in place for. Stage 1 of that was the micro turbines being installed and commissioned for on-site generation, and that was fully completed in March of this year. The next stage is the gas engine procurement of a used unit is underway on that, and we're working through all of the local network issues to get that on as soon as we're able to. And that will stop the need for routine gas incineration on site. The second stage of that gas monetisation is clearly related to the future development plan and relates to gas export, and that will form part of the next planning application in relation to Wressle. So despite a gradual increase in the associated gas, as you would expect, as the downhole pressure continues to slowly reduce, the micro turbines have enabled a 10% uplift in oil production so far, and we're looking to obviously optimize that and increase that as we're able to over the coming weeks and months. So during March, 770 barrels of oil per day were produced from Wressle. The community fund's up and running, and we've so far committed 100k to good causes, which clearly is very beneficial to the local community that hosts the Wressle development. During the period, we completed a number of site facilities upgrades. So the separators, knockout pot, and production lines were all moved to a permanent bund in the late summer of last year. And we've, as we mentioned, installed the 3 micro turbines, which are now housed in a protective shroud to make sure they don't get any fine dust from the fields surrounding the site. So looking forward with Wressle, what are we planning to do over the coming period? So I think, first of all, to sort of back up, we reprocessed the 3D seismic data during the period and have completed an interpretation and mapping exercise on that. And that's shown us that there is a potentially significant increase in the resource from the ash over grit. We've commissioned an updated competent persons report, and that's expected to report back in June of this year. That CPR will inform the optimum development of the ash over grit and Paniston Flag reservoirs, and we'll be able to provide more details on the detail of that plan once that work is complete. But in the meantime, planning and permitting is underway for a new well or wells, which we hope to be able to commence latest this year and into 2024, and that will include drilling and the stage 2 gas monetisation, the export and sale of gas. And of course, both of those are currently subject to regulatory approvals. Potential new well site we're looking at as well to look at the contingent resources in the Paniston Flags and the Broughton North prospect, which is located to the northwest of the main area that we're currently draining with the Wressle 1 well. So quite a lot of activity planned and underway in terms of Wressle. Moving to our other producing assets at Keddington, we're looking to boost production there. We're looking to target a sidetrack which should deliver around 180,000 barrels of incremental production. All of the consents are in place for that. The 3D seismic reprocessing has been completed, And we're just in the very, very final stage of defining the bottom hole location for that. As I say, that could be the first well in a drilling program commencing in Q4 of this year. That isn't all we've got at Keddington, though. We've got other near field opportunities there at Keddington South and at Louth, which could add over 600,000 barrels each to the long-term production potential from Keddington. So we see quite a lot of upside in Keddington still. Avington. So we're ready there for redevelopment this year. It's operated by iGas. It's been shut in since 2017. Gone through quite an extensive planning process there. Planning being granted on appeal in December of 2021, and now all of those conditions associated with that planning have been discharged, and we're looking at a phased scope of works to redevelop the field, which is currently underway. First stage will be workover and flow testing of the Avington 3Z well, and depending on the results of that, further drilling is anticipated on the field. It's got a lot of oiling in place. We increased our interest here through the Aurora production acquisition to 36.33%. And we do see significant upsize in reserves volumes currently recognised, plus scope for on-site water disposal, which will be key to the economics here. At Waddock Cross, which we operate with an increased interest of 73.75%, we're looking to redevelop that field in 2024. It's a Bridport sandstone oil field, significant oil in place, around 57 million barrels. And work we've done over recent years has shown that commercial production of somewhere in the range of 500 to 800 barrels a day will be re-established with about 1 million barrels recoverable per well. We've got JV alignment to progress the redevelopment and are in the process at the moment of submission of planning and permit applications to enable us to do that. That's currently ongoing in this first half, and the second half we'll be looking at the detailed design and procurement of the production facilities and finalising the well design and procurement for drilling in 2024. So that's production development. I should add that Ceres sits in there, still churning away, still making good money for us, but right at the end of its life now. And I suppose we're expecting that to cease production in the next couple of years, depending on where the gas price is. But moving towards exploration, I mentioned Weaverthorpe and the option we have there in the introduction. We see this as something which balances our portfolio in terms of gas. It's a Sherwood sandstone prospect, up dip of a well which had interpreted gas pay within the Sherwood sandstone. That's a good quality reservoir, and we're mapping this from 2D and 3D seismic data. As I say, 58 billion cubic feet, the mean prospective gas resource. So we're currently underway with a reprocessing of the legacy seismic data and looking to validate that prospect and make that decision to farm in during June, July of this year. Both Biscathorpe and North Kelsey are around 6 million barrels of potential. Both of these are currently contingent on outcomes of planning processes. It's disappointing that we haven't heard yet from the Biscathorpe appeal, which was back in October of last year. It's outside of our control, and the decision is awaited. In terms of North Kelsey, as I mentioned earlier, we have a confirmed date for a planning hearing on the 14th of June, and we would expect to hear pretty quickly following that. So hopefully during the late summer. And both of those wells with planning consent, we'd expect to be drilled as part of a 2024 drilling program. I think if we'd have had this conversation in September, October last year, we'd have probably had a number of slides on shale gas. We've got a very substantial portfolio, 152,000 net acres, 38 TCF of gas net to our interest, primarily in the Gainsborough Trough, where we drilled Springs Road, which proved up, in our view, a world-class resource. However, we saw the government flip-flopping on the moratorium last year. That had been in place since November 2019, lifted in September, reintroduced in October. However, what we will continue to do is make the scientific, environmental and commercial case that shale gas should be a part of the long-term solution to the UK's energy needs, and that can be done in a safe and environmentally sustainable manner. Clearly, at the moment, we're importing via LNG shale gas from the US with none of the financial or environmental benefits that an indigenous shale gas industry could provide. So we'll continue to make that case, but I think it's fair to say at the moment we are seeing no obvious movement in government position there. Moving to the energy transition and what we're trying to do there in terms of the longer term potential of the business. We recognise that our existing fields, sites and wells have opportunities for renewable purposes. Our initial focus on Dukeswood 1 for geothermal. We have all of the consents in place for that and would expect to commence that in the second half of this year as part of a wider programme of works to make sure we get the benefits of the cost benefits of a wider programme. As a company, we're also developing a number of standalone opportunities for energy storage, green hydrogen production and renewable generation, and hope to be able to make material progress in relation to those during this year. They're selected where we see that our skills and financial resources can make a tangible impact on the company's value. Turning to our environmental, social and governance side of the business, we look to build value through developing sustainable long-term relationships, committed to the highest standards, and have had another period with no material health, safety or environmental issues. We're fully compliant with all of our permits and planning consents. And one of the things we've done in the last period is established a climate change policy, committing us to go net zero by 2050 and at least a 25% reduction by 2035. And we were looking to commence reporting of that during the 2023 reporting cycle. We have accepted and comply with the Quoted Companies Alliance Corporate Governance Code, and all decisions are made in accordance with Section 172 of the UK Companies Act. So we'll be doing more on this, but we believe that we are building a very strong ESG credential. So looking forward, the revenues continue to be strong, as highlighted from the February and March revenues, 6.6 million, 0.5 million. Our guidance has been increased for the full year 2022-23 to 240 to 250 BOEPD. And our key operational priorities are to really maintain and enhance that strong production we've seen at Wressle, whilst we progress that gas monetisation and the further development of the field. We see a long way to go with Wressle. To add value, reserves, production and revenues through the drill bit in the projects that we've outlined, Waddock Cross, Keddington, Avington, Kirkleatham potentially, not mentioning Weaverthorpe, Biscathorpe, North Kelsey. And progressing our nascent geothermal, energy storage and hydrogen projects during the coming period. We'll continue to make the case for shale gas whilst we look to maintain our holdings at minimum cost. And we're funded for the proposed forward work programme with the cash we have and the cash we're generating. So I think with continuing strong cash flow to support that programme, we can look forward with some optimism. And I think at that point, I'd probably like to hand back to Jake and look at answering your questions.
Mark, James, Martin, thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Guys, we did receive a number of pre-submitted questions ahead of today's event, and as you can see there in the Q&A tab, we've also received a number of questions throughout your presentation this morning as well. So firstly, thank you to all of those on the call for taking the time to submit their questions. And Mark, perhaps if I may hand back to you to chair the Q&A session with the team, and then I'll pick up from you at the end. Thank you.
Yeah, thank you, Jake. So I'll work through these questions. So the first one we had in prior, please could I ask, if the Biscathorpe decision continues to delay, will you be moving to Keddington to drill the sidetrack earlier around the summertime and deal with Biscathorpe towards the end of the year, provided this is good news? I think the two things are not really related, in the sense that we obviously have all our consents in place at Keddington and are ready to go there. The only sort of linkage really is in terms of putting a program together so that we can get the benefits of a continuous drilling program. So I think it's most likely in Q4 we'll be looking to go to Keddington, irrespective of where we are with the Biscathorpe process. But we will be looking to put Biscathorpe and anything else into a more substantial program, commencing late this year or more likely early next. In terms of the second question, now that they've been running for a few weeks, could you please say how effective the 3 Wressle micro turbines have been in terms of increased daily production? Well, I think we did answer that in the presentation. We've seen about a 10% increase overall through having the micro turbines available. We hope to manage that, but when these things are on long time, you can't run them at 100%. And also we have seen in the background a gradual increase in the gas oil ratio at Wressle. So yeah, 10% so far, but we'd hope to nudge that up a little bit over the coming weeks and months. Question 3, have you been able to advance your Wressle gas utilisation plans recently? I ask this because there appears to have been no planning application to North Links Council that deals with this matter. So I think, as detailed in our release today, the gas export element of that will be included in the planning application that we're currently developing. We've submitted a pre-application documentation to North Links. That will inform what reports we need to accompany the final planning application. And we'd certainly hope to be moving that forward once we've got the final results of the CPR and the technical work associated with that as quickly as possible. I think in terms of the first phase of the gas utilisation, the gas to wire part of that, the issues there are effectively sourcing the gas engine, which we're well advanced with, and dealing with the local distribution network in terms of embedded generation, all of which are progressing well. Moving to Q4, you have several attractive projects where I understand that a well is planned in 2023, as at Wressle, Keddington and Waddock Cross, and also at Biscathorpe and North Kelsey if a favourable planning appeal decision is obtained. I'm keen to know how you are progressing with a rig contract, as the drilling programme could take many months if all 5 wells are drilled. So I suppose we're in a sort of catch-22 at the moment, in that we don't know the precise timing or number of wells that we're looking to drill, but what we have been doing is a lot of long-term planning on that. We're currently planning the detailed well planning, procurement and contracting for that programme. We've reviewed all of the available rigs in the UK, identified a number of potential options, and we expect to progress to contract in the coming period once we've got a clearer idea on that full scope of the drilling programme. It's also clear that a single rig is not likely to be suitable for all of the wells, given the differing depths and designs and requirements of them. So I suppose the takeaway from that is we're making progress. We're on top of that. Once we get some clarity on planning for things like Biscathorpe and North Kelsey, we'll be able to put together the detailed plan and start to contract that rig. But at the moment, we don't see that as being a critical path item. There's not a lot of activity ongoing in the onshore UK outside of what we're currently planning here. So we don't see rig availability as being a critical path issue in relation to drilling these wells. Question 5, is carbon capture an opportunity for EGDON resources, and is it quantifiable at this stage? I think it's fair to say we don't see carbon capture utilisation or storage as a material opportunity for EGDON, as the scale onshore is relatively small. This tends to be looking at very large depleted fields offshore or undeveloped reservoirs offshore, where you've got large volumes of potential storage. We do think that reusing old oil fields could provide a local solution for carbon sequestration, but we don't see, as I say, this is a major business for the unit. We keep everything under review. So once fields get towards their end of their life, we're looking at ways in which we can continue to extract value from them. For example, Duke's Wood, looking at the geothermal test there. But we don't see carbon capture and storage as being material onshore. It's generally going to be an offshore business in our view. I'll probably hand this number 6 over to Martin, who's the key manager for the Wressle project. But Martin, the question is, could you advise how long the CPR will take roughly for Wressle?
Yeah, sure, Mark. The Wressle CPR was initiated in initiated in February of this year. This followed the seismic reprocessing of the legacy 3D data, which has last been completed in 2015, and the last CPR was completed in 2016. So we thought this is an opportune time in which to update the resources for those reservoirs which would have been proven productive within the Wressle 1 well. So that's namely the Penistone flags, the Wingfield flags, and the Ashover grit. And we're also using this opportunity to assess other reservoirs that were identified as hydrocarbon bearing when the well was drilled back in 2014. Those other reservoirs weren't included in the previous CPR, but will be addressed in the update, which, as Mark said earlier, should be completed sometime in June. Thank you.
Thank you, Martin. Okay, question 7. When do you intend to submit planning permission for the next stages of Wressle development? And do you realistically consider that there is sufficient time left to take this through the planning process and get drilling set up and started by the end of this year? So good question. I think we're hopefully not going to have the same protracted planning process that we had with the consent for the development of the Wressle 1 well and site. As I mentioned, we've already submitted the pre-application planning documentation. We're working on the detailed planning application for further drilling and for the gas monetization, and that will go in, I would imagine, late first half of this year. The planning process should be something of the order of 3 to 4 months. So theoretically, that gives us the opportunity of drilling late this year. I think the reality is that with the environmental permit application probably being the most time-consuming element of that, that's clearly going to be challenging, but we're still planning and hoping to be able to do that. If not, then as early as possible in 2024. I suppose the takeaway point is we're trying to do this as quickly as the planning and permitting process and the technical work that needs to feed into that will allow us. So we're really getting after this and have been after it for quite a number of months now. So Chris T has a question here. No debt, strong balance sheet and assets. Why does the share price not better reflect the opportunity? I honestly can't answer that question very straightforwardly. I think there's a general issue, I think, at the moment in terms of small cap companies overall, and small cap E&P companies in particular. All we can do is put the story out there, run the business as well as we can, continue to get the messaging right, and we're looking to improve that messaging and make sure that we get that message out to more potential investors. But yeah, I mean, I think we would all probably agree that given the revenues we're generating, the opportunities we have, the current price of oil and gas, we would hope that that's reflected in the share price at some point. And the final question I have on here is, another one just popped up. What were Avington's production rates before it went offline a few years ago? I guess don't look that interested, as only a one-line mention in its recent report. So, I mean, first, to answer the first part of that question, the rates were around 60 to 80 barrels a day when it was shut in from one well. What we see is recharge into the reservoir, so we'd expect to see some flush production when we bring it back on stream. And I think the key thing there is it's the unproduced oil in place that we see as the longer term opportunity at Avington. I think it's fair to say that if you look at iGas, they don't tend to go into a huge amount of details on individual assets within their reporting. They tend to bulk their oil and gas overall. But certainly we see them as being committed to bringing the field back on stream. There's work ongoing as we sit here today. And so we are reasonably confident that we have an asset there which is capable of adding material revenues to us in the coming period. I think, unless I'm mistaken, that's all the questions. I don't know if anybody wants to put anything else up.
Mark, James. Sorry, Mark, go on, sir.
I was just going to say, so in that case, I'll sort of hand back to Jake.
Thank you very much, Mark, and James and Martin as well. Thank you very much indeed for being so generous of your time there and addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so, and we'll publish all those responses out on the Investor Meet company platform. But Mark, perhaps before just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yeah, absolutely. Thank you, Jake. So I think the key takeaways from my perspective are that we've got a very much strengthened financial position. We've seen production and revenues grow through the period. The energy profit levy, we'll expect to see a reversal of that as we start to invest and take advantage of some of the clawback related to the investment allowance there. We've got a strong cash position, no debt. Wressle has been outstanding, and we see a lot more to come there. And we'd expect to be providing shareholders with a lot of information on that over the coming period. And that Plan 23-24 work program, we think could be transformational for the business in terms of really growing our production and revenues further. We've got Biscathorpe, North Kelsey, as well as Wressle, Waddock Cross, Keddington, Abington, potentially Kirkleatham, which we haven't mentioned, the Weaverthorpe prospect, and the Dukeswood 1 geothermal repurposing. So we can look forward to some exciting news flow and hopefully some very significant value-adding opportunities during that period of time. So notwithstanding, I think one of the questions about our current share price, we think that the fundamentals of the business and the opportunities we have are very strong.
Mark, that's great. And James and Martin as well, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of EGDON Resources PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.
Thank you.
Thank you.
Thank you.